Hello, everybody, and welcome to the latest Fixed Flow webinar. This is an unusual one for me. Rob, we've worked together for years. Is this the first time we've actually ever done one of these together?
Yeah, I think it is. Yeah,
That's
I think
strange.
it is.
How weird. Anyway, everybody, what we're going to be talking about is what could be a dry subject, building insurance, but hopefully won't be a dry subject because when you start digging into it, there's a lot more to it. Anyway, I have to go through the basics first. So, Jonty, can you give me the disclaimer? So I have to read this out. All content presented in this webinar is intended for general information purposes only and should not be considered as legal advice or official guidance. Sad that we have to do that. Next one is about how to interact with us. This is a really important part. It's a conversation between Rob and I. We've got some ideas that we want to talk about, but ideally, you guys will start feeding questions in. Jonty will kindly moderate them, and they'll feed them in, and we'll answer them if they're appropriate or if they fit into the flow, etc. But please do ask questions. I do want this to be interactive, and usually that's how it flows. So what I'd like to do is introduce Mr. Rob Mayo, CEO of Insurety. Rob, talk us a little bit about yourself and Insurety.
I'm the CEO and founder of Insurety. I started the business in January 2020. Not ideal timing, but obviously I didn't see the pandemic just around the corner. But we've grown rapidly to a team of 25 now, over 4 offices, and responsible for the insurance of around about 8,200 developments. So we like to think that we're leading from the front, and we are leasehold specialists. We don't do anything other than blocks of flats.
Hmm. Yeah, I can do that. And Rob and I got to know each other when he started out, and I started Armour Insure in those days, and it meant that he and I used to call on him particularly when dealing with governments. I mean, ironically, I think we came up with that scheme, or you did, with all the CEOs of the major insurers to push through a sort of a re-scheme with government 5 years ago, 4 years ago,
Yeah, it was.
and
Yeah,
they
about
yeah,
that.
they wouldn't run with it, but then they've announced it sort of 6 months ago, and I sort of read that and thought, where have I seen that one before?
Yeah, it's a bit of a shame, really, because the scheme proposal that we put forward was far stronger than the facility that's been sort of put in place in recent weeks. And I think ultimately, Nigel, it would have saved an awful lot of pain
Mm,
over the sort of preceding 3 or 4 years.
mm. All right. Well, let's. I've got some questions, like I say, but we have some hopefully coming in from people. What we're going to be looking at is looking at general topics on buildings insurance. The topic which I'm sure lots of people on here, particularly the owners of the firms, will be worried about, which is the banning of commissions, what impact that will have. We'd like to always sort of have a practical session here about what can you do, so you can walk away from this webinar at 12 o'clock and hopefully sit down and do, saying, I've got to do some things here. And let's move on to that. Buildings insurance. If I think back to my days as a property manager, it's one of those strange things that you just do. You ring up a broker, get a renewal. Ideally, you get a few quotes, but there's going to be, and that's kind of your input as a property manager. But I'm sure there's an entire, well, of course there is. There's an entire industry hidden behind that with lots of players, whereabouts in the world. How does it happen? So I'm the property manager. I say, Rob, I'm up for renewal, or I've got a new property. What on earth happens after that? What rabbit hole does it disappear down?
Lots, I think, is the simple answer. I think part of the sort of problem, and one of the things that property managers should bear in mind, especially when sort of conversing with leaseholders, is that insurance is a very highly commoditized product. And a lot of people misunderstand the complexities with regards, in particular, commercial insurance lines. So blocks of flats, as an example, is a commercial line, and it's not as commoditized as, say, motor insurance is, where you can go online, you can quote, you can buy your insurance and get your certificate without speaking to a human being. The commercial insurance sector is very different, and it is still involves a huge amount of human interaction. The sort of life cycle of insurance at the very beginning starts with the insurer's actuarial department. And you tend to find that they're an incredibly sort of well-educated boffin, if you like, who is very, very good with numbers, and will effectively look at the risk factors to arrive at a starting premium.
And what are those risk factors? We hear in the news a lot, cladding, obviously, height. I'm guessing location. Is it on a floodplain, or is it in central London, or is it a bit more simple, which is if it burns down, how much does it cost to reinstate it?
It's all of the above, if I'm
Yeah.
honest. So they will look at postcode ratings, and that's not just looking at the whole postcode. It's per digit postcode ratings. So for example, I'm based here in Cheltenham, so an insurer will look at not just the GL postcode as a whole, but they'll look at the GL50 postcode, and then they'll look at the GL52, and they'll map it sort of almost sort of to the letter on the postcodes. But you've got, I mean, your normal rating factors are things that we all know: claims histories, locations, subsidence risk, flood risk. Flood is now sort of broken down into a number of different areas. So you used to just have flood. Now you've got water runoff, which obviously we saw during the July floods in London a few years ago. So there's a huge amount of data that these actuaries will go through to arrive at the starting premiums, which they will then effectively put in front of their underwriting teams.
And so again, come across that phrase many times, an underwriter. It's sort of a strange phrase. What does an underwriter do, and who employs them? Are they just the same firm as the actuarian, or is there a group? What is an underwriter?
Underwriters are employed and represent the insurance companies effectively that they work for. And underwriters are there to look at the risks that are presented to them and effectively apply increases in the base premium that the actuaries have given them for negative risk factors. So again, it could be something like claims history. But likewise, underwriters have the ability to apply discounts for positive risk factors. So again, for example, if a development's got a sprinkler system installed, you may find that an underwriter has the ability to apply a discount to the overall premium.
Okay, so why don't property managers go direct to the insurers? Why do they need brokers in the middle?
So again, it's a great question. With insurances that are we would call personal lines insurances, so the insurances that we all buy as members of the public, be it car insurance, home contents insurance, travel, life, any of those sort of insurances, they are what are called non-advised sales. And that effectively means that you can go onto an internet and you can buy a policy for yourself. Commercial lines, so that's anything with a sort of a business orientation to it, is an advised sale. And that's where brokers come in providing that advised sales process and effectively providing advice as to the covers that are required for the end consumer. So that is why property managers in particular would come to brokers in order to access insurance companies.
And what about the FCA? Again, I'm years out of date, but I remember that we could deal because in those days we were an authorized introducer. Now, it's a bit of a weird one because it technically meant all we could do is say, "Dear broker, here's the board of the RMC," technically. Whereas of course the board is, well, you deal with it, Nigel. You get the claims history, you do all the paperwork, you deal with everything. Just come back to us with the numbers. What's the relationship with property managers now and that side of the legislation?
Yeah, I mean, so I'm guessing probably what you were referring to is what used to be called an introducer appointed representative, or IAR, which is largely a thing of the past. It was pretty much abolished with the introduction of the Insurance Distribution Directive, which you might remember, Nigel. We helped the managing agents dodge a rather significant bullet in the 11th hour.
Just for the audience, that was a lot of work behind the scenes because it required, as the leaseholders were seen as the end paying customer, that you'd have to take their advice on every single one. So you'd have to get the advice of all leaseholders about what insurance they wanted and whether they liked the one you were going for, etc., etc. And we had to point out long and hard for many, many months. We had to deal with the Europeans at that stage, I seem to remember, that that just that would just be impossible. And unfortunately, common sense prevailed. But yeah, sorry, back to the old
No,
IDD.
yeah. So the IAR side of things, that sort of model is pretty much gone now. There are still a few knocking around, but give it a year or so, they'll be gone as well. I mean, the two sort of models that you've got now really are appointed representative and directly authorised.
Hmm.
The directly authorised is split into two segments. So you've got the RICS, exempt professional firm status, and then you've got the directly authorised status, such as Insurety. So we report directly into the FCA. We know that there has been a push from brokers over sort of fairly recent years to have more managing agents as appointed representatives. And it is a very grey area because property managers, by their very nature, do get involved in regulated activities. Even handling client money that is being used to pay insurance premiums is technically a regulated activity. I think the danger is that by being an appointed representative, you are as likely to have the FCA knocking on your door as we are.
Mm.
Now, whilst that strikes the fear of God into me, because I've been through many FCA audits and none of them are ever pleasant, we deal with the FCA day in, day out. We deal with insurance day in, day out. A lot of managing agents won't necessarily have the sort of policies and procedures in place that the FCA would expect to see. So I think there's an element of danger there, which is why we, for one, we work very, very closely with our managing agents to ensure that they stay on the right side of regulation, and they don't overstep that mark, because ultimately the FCA have got some fairly scary powers.
Mm. Yeah, and I remember sort of investigating becoming FCA registered, but basically being told it's a horrible amount of work.
It is. I mean, I employ someone full time just to deal with our regulatory sort of regime, if you like.
Mm. Now, you talked about insurers, and I remember a comment you made years ago, which is you used to sort of have 127 odd, I don't know, I remember that number, insurers worldwide that you could call on, and then post Grenfell that shriveled to almost nothing. What is the landscape of people or firms in the background? The Avivas, etc. Nowadays, has it improved a bit, or is it still pretty horrible?
Well, I mean, to put this into perspective, when I set up Insurety, 4.5 years ago, including our sort of Lloyd's arm and the managed general agency that we own and run, we had access to on a good day, about 600 insurers globally. I think fast forward to now, again, on a good day, that's probably down to about 100, including Lloyd's. And I think, what we saw with the events in 2017 with Grenfell was it made a lot of insurance companies wake up and look at what they were insuring ultimately. And Nigel, you may recall, I worked for an insurance company. I was director of property for NFU Mutual, and I can remember very well, having a conversation with my CEO at the time, and saying, we need to review what we're insuring. Was effectively told to go away. Property was our most profitable book of business.
Mm.
And we did that review, and in fact, it showed completely the opposite. It was inherently unprofitable, and that's the same for all insurers.
Yeah, that really surprised me because I remember that conversation that the insurers sort of hadn't looked at Resi before, and you think, sure, if they're going down to postcodes to worry about stuff, how come that penny hadn't dropped?
I think it's because property covers not just residential blocks, but it covers commercial property as well.
Mm.
It covers private house, freehold homeowners. It covers the whole sort of broad approach. And the fact of the matter is, if you look at the commercial property market, it is a very profitable market for insurers. If you look at the freehold homeowners market, it is a very profitable line of insurance for insurers.
Mm.
If you look at multi-occupancy residential, it is very unprofitable, unfortunately. And it's really only since sort of 2017, 2018 that insurers have split those products, if you like, apart and really started to focus on the profitability of each one.
So when a property manager who's listening to this call, gets somebody understandably saying, "Why is my buildings insurance gone up?" We're going to come into some rates a bit later on. Is it fair to say, based on this discussion so far, that the insurance industry woke up to the risks in resi that they hadn't figured out post Grenfell, that the number of players has dramatically shriveled, so you don't get so much competition. It's a much harder market. So there's fundamentals there which aren't going to change in a hurry. So even if you strip the cladding off, it's going to help, but there's stuff in the background. So I'm just trying
Yeah,
to formulate what people listening here can say to their leaseholders, that
yeah,
it's a much deeper problem than just, oh, have you got cladding or not?
yeah, absolutely. And I mean, insurers have, and I spend half my life beating up insurers, so please don't think I'm defending them, but they have had a hard run, certainly post Brexit, in
Mm.
so much as their investments haven't provided the incomes that they had done historically. The FCA require insurers to hold larger sums of money in reserve now to pay claims, and that's effectively money that sits in an account that an insurer can't do anything with. So it's kind of dead money, really.
Mm.
It's just there to cover the insurer's liabilities. And costs have increased significantly. I mean, as we'll see in some of the later slides, the costs of claims have gone up hugely over the last 10, 15 years.
Yeah, I think it's something that people don't realize, that construction costs, builders, physical costs like bricks, all of this have gone way out of kilter.
Mm.
And it doesn't matter, we won't get into the tenure debate, but it doesn't matter if you own your house or you're in a block of flats. Everything has gone up substantially more than inflation, which was bad enough as it
Yeah.
was.
Well,
Um,
it's an interesting one, something that's often overlooked and not particularly well understood is that all insurers rely very heavily on reinsurance companies to provide a level of sort of safety, if you like, in the event of a large claim. So if you use £100 million development, let's say, and it's placed with ABC Insurance Company Limited, ABC Insurance Company might take the first £50 million worth of risk,
yeah.
but they will pay for reinsurance to take the additional £50 million so that they can write it. And unfortunately, a lot of those reinsurance companies are based within Europe. And obviously, now that we're outside of Europe or the EU, those sort of policies come at extra cost, and that is passed on to the consumer.
Sounds a bit worryingly like some of those banking products I used to deal with in structured credit, where you have it layered. Now, there's things you can do on your policy, though, aren't you? So quotes come back. Hopefully, they're all identical. But when you start getting into well, if we do this excess on water or that on this, and et cetera, how do you jiggle those around?
I mean, it's very much done on a development to development basis. So if you've got a development that has a, an inherent issue with water claims,
Mm.
um, putting the excess up is a good way of trying to stop those claims. Obviously, that has a knock-on impact when leaseholders try to make a claim. But jiggering around with excess is a way of certainly leveling out insurance premiums, if not bringing them down. You could
What else can
argue,
you do? I mean, you've got claims history, so I know from from my past that you can inherit a block and it's got claims sitting on the book which are 5, 10 years old and aren't going to be claimed anymore, and clearing those
yes, I
out
mean
can help
those
a bit.
those need to be shut down and got rid of ultimately.
Yeah.
The insurers will look at they don't just look at the claims and how much have been paid out in claims. They also look at the claims frequency. So, for example, if you've got a development that has, say, I don't know, every single year they have a £2,500 water claim, an insurer will look at that and say, well, this year could be the year that they have a £250,000 water claim. There is clearly an issue there.
Mm.
On the flip side, if you've got a development that's got a largely claims-free period of 5 years, but they've had a £250,000 water claim, an insurer would be looking at that saying, right, they've had an unlucky year. but there isn't an inherent issue here with the developments pipework.
Mm.
I think with regards to sort of risk mitigation, the first thing is that when property managers get the quotes back from their brokers, check the statements of fact thoroughly. Make sure the details are correct on those statements, because that is what effectively is used to arrive at the premiums. Likewise, a lot of insurers now are surveying properties both before inception of a policy and during a policy term. And a lot of the time, those reports that come back from the insurer surveyors will have risk improvements that need to be done. Get them done. In a timely manner, get them done.
Okay.
Make sure that health and safety policies are in place. Any fire safety issues are dealt with as soon as they can be.
Now you often get the leaseholders, not often, but you get the leaseholders saying, you've been with the same insurer for 3 years. Why aren't you pushing? You're obviously not testing the market. You're not pushing us around. That can have a two-edged sword doing that, though, isn't it? If you push yourself around the market too much.
Yes, yeah, it can. You can very quickly become the pariah of the insurance market. And we've seen it a lot over recent years, especially on developments that are undergoing or need remediation, where a broker will almost take a scattergun approach and go out to 50 insurers. I think the thing to bear in mind is that only one insurer will win a policy that they quote on. And as such, your brokers should be taking a very pragmatic view when they are marketing a risk to insurers. So as an example, what we will do is we will look at a risk and we will say, well, this fits in with Zurich and AXA and Aviva, say, for example, but we've got Excella and a few others on the periphery that might be interested. We will go to all of them and we will ask for indications of their premiums. And those indications won't register with the insurers as a live quote, if you like. They're just a rough indication. And what that enables us to do is to then say, right, well, we've got AXA, Aviva and Zurich, who are clearly the most competitive with their indications. So now let's go and get a contract certain quote from those three to present to the client.
So again, it's another layer of, I'm sort of feeding you advertising here, but another layer of what brokers do to help that a managing agent probably wouldn't know how to do if they did it.
Yeah,
I'd
probably
that
say
agents do it themselves, but
yeah, I'd probably say to that, Nigel, what brokers should do.
Yeah.
Yeah.
And it's the terms and conditions. I remember somebody saying, "Oh, I've your firm has come up with this, and I've gone to the market through some friends, and I've got a much better quote." But when we looked at it, it was things like, if a horrible thing did happen, there was no accommodation provided, etc. And as I say, the excesses were wildly different, etc. And that was quite a difficult discussion, because they were going, "Well, the premium is so much lower that I found. Why can't you do that?" And it's apples and oranges, pal. It's just so different, and the policy you've got is not fit for purpose.
Yeah, absolutely. I mean, we've had one this morning that just a quick look on Google Maps has shown us that it's a timber floored development, whereas the current insurer's got it down as concrete. Well, there's about a 50 to 60% loading on the premium for timber floor. And whilst that might be a bitter pill for leaseholders to swallow, ultimately you're paying a premium. You need to be insured. And if an insurer has a claim on a timber floored block of flats that they think is concrete floored, good luck.
We've got a question coming about the TPI stats. We're going to come on to that a bit later. So, anonymous attendee, don't worry, we'll certainly be coming on to that. The other side. So, you're my broker. Something's happened, and I ring you up and say, the washing machine braided cable has bust and it's flooded everywhere. What happens then? So what's the other side of the coin? So how does that turn into what eventually becomes a settled claim? There's an awful lot of stuff in between, and again, there's different models. I at one stage had a broker it was my problem to sort everything out. and fill it with paper. And I know, again, it sounds like I'm doing your advertising, but you and many other brokers offer a different end, which is just let us know and we'll take it from there.
Yeah.
But what's involved in all that? Because somebody at some stage has got to kind of go, no, we're not covering that, or yes, we are, and it'll cost this much, or we'll settle for, or just send us the bills. How does the other end work?
Okay. I mean, there are a number of answers to that, but I'll try and go with the easy one for the time being. I mean, ultimately, property managers should be getting in contact with their broker as the first port of call and reporting it. What I would say to property managers on this call is if it is a leak or a fire or whatever the claim is, in the event of a leak, make sure the leak stopped. You don't need to speak to your broker to get that done, get an emergency plumber out and stop that leak. That's the first thing. You can go a stage further and you can start ordering in appliances to help aiding with the drying out. That's completely within a property manager's gift to do without speaking to the broker. But ultimately, once a claim gets notified to us, we will look at the supporting evidence very, very quickly, and that's photographs, description of what's happened. And we will then decide which peril under the insurance company's contract that claim fits within. So obviously the most common one is escape of water. We will then present that claim to the insurer, and the process then starts with the insurer advising us as to what they need. Normally, with sort of fairly low level insurance claims, the insurer will say, yeah, go ahead, remediate, and they'll tell us to do that straight away. So, the turnaround from notification to starting the remediation process can be as little as an hour
Is
on
that the
occasion.
underwriter? Is that
No, so
the claims
it would
department,
be,
I guess,
yeah, it
whatever
would
that
be
is?
the in-house sort of claims technicians.
Yeah.
If it's a more complex claim or it's a claim that has occurred within a complex building, so let's say, for example, a listed building, the insurers quite often will appoint a loss adjuster, which is a third party firm,
Mm,
who will effectively be the eyes and ears for the insurance company on the ground.
mm.
And the loss adjuster will put a scope of works together along with pricing, and present that to the insurer for their agreement. With a number of insurers, we have something called delegated claims authority, which effectively takes the power for low-level claims away from the insurer, and it allows us to agree claims on behalf of the insurer, which just, again, speeds things up even more for the property managers and the leaseholders.
Is that set at like your company level or on the block level? Do they just say anything below 250,000, Rob, do it, or
I wish
at
it
this
was
block?
250,000.
Oh, okay.
Yeah, I mean, it's the lowest level is about 5,000, and it can go up to 15. So it is
Mm.
really the smaller claims that tend to be the higher frequency claims, that insurers really don't want to get bogged down with.
I mean, something that there for a property manager to think about. Do you advise on, yeah, you could claim for that, but the effect on your premium, it'd be better if you just self-funded it. Or sorry, your client self-funded it. Because the
Yeah,
temptation, of course, is just go, right, we got insurance, let's claim it. But we all know if you've had a car dink, it might actually be better just to do it yourself.
yeah, yeah. And I think it comes back to that frequency part that I spoke about earlier on. Insurers look at not just the value of claims that are occurring, but how frequent those claims are. So
Mm,
you can be, and again, we see it all the time here, you can be in a position where you've got a really nice development that's got a string of sort of £750 water claims that all of a sudden gets hit by an insurer because that frequency is so high.
mm.
Whereas on the other hand, you've got not such a nice flat that's had an unlucky year with a £50,000 water claim that's not hit as hard.
Yeah, on practical things, something that my old firm used to do would we had I think forward-looking plumber, and he offered to go into everybody's flats in developments and do a quick O check of the state. Now he was obviously getting his face in front of leaseholders so that when they said, "Oh, I want some bathroom work doing," he was known. But it was free,
Mm,
and that helped a hell of a lot. And you and I have talked the other day about the danger of braided cables. They look great, but you actually have no idea how perished the rubber is underneath. And when
yeah,
they go, it's dramatic.
yeah. Yeah,
And
I mean,
he would point out, there's a speck of rust on this braided cable. That thing's about to blow.
yeah, yeah. I mean, we've had a number of developments across our desk that have had inherent water issues, and as a part of sort of the insurance contract, we've actually negotiated with the insurer to pay almost like an annual subscription to
Mm,
the development to get a firm of plumbers in to do 6 monthly checks on each unit.
mm.
And I've got to be honest, the results have been magnificent, really, really positive.
Magnificent in terms of claims gone down, premiums
Claims
gone
gone
down.
down, premiums coming down, and excess is reducing as well. So
Okay.
everyone wins.
Couple of questions. So, one, this is one that I was expecting actually. Who pays the excess on an escape of water claim? The claimant or the person who caused the leak or the service charge?
It should be the person who's caused the leak.
Doesn't depend on the lease though.
It will depend on the lease,
Yeah.
but more often than not, it's the person who caused the claim effectively to occur.
Okay. Yeah.
The subject of paying excesses on service charges is strangely enough a conversation that I'm having with Casanelli at the moment as to whether, from a legal viewpoint, it can be done or not. And
Really?
there are so many moving parts with it, as you'd expect.
Mm. Gosh, I'd thought that was a bit clearer cut than that, but legislation changes so much. So another, everybody's anonymous today. Regulation. Why aren't insurance brokers signing up new appointed representatives these days?
Um, Great question. Ultimately, the FCA, and they've never made an announcement officially, if you like, but the FCA are incredibly nervous about appointed representatives purely because they are entities that are effectively transacting insurance but are not directly authorized to do so. So there is an element of fear, I suppose, is probably not the right word, but nervousness from the
Discomfort,
FCA
yeah.
as to
Yeah.
as to what is going on amongst those sort of sectors, if you like.
Mm.
And you've got to bear in mind that an appointed representative can be anyone. I mean, I was absolutely amazed to find out that my dentist that I go to is an appointed representative of an insurance broker. And having a dentist practice have the FCA auditors knock on their door is quite a scary. In fact, it's probably more frightening than going to the dentist in the first place as a patient.
It can inflict more pain.
Yeah. But it could be car dealerships is another example, and it could be a second-hand car dealer who perhaps doesn't have the best reputation as an appointed representative.
So the question is, why aren't they doing it more often? Is it just because the FCA is breathing down the brokers saying, "What are you doing here?" and we'll hold
Yeah,
you accountable for the people that you appoint.
exactly. So we as the regulated entity, I mean, we've got a couple of appointed representatives. They happen to be companies that I own that we work with. So there's an element of safety there. But by being an appointed
Bit of a casual
representative,
remark there, companies that I own.
well, sorry, but those companies effectively come under my banner of regulation. So if
Yeah.
they do anything wrong, it's Insurity's head on the chopping block, and that's a very dangerous position to be in, especially when you could have hundreds of appointed representatives acting on behalf of your company. It's a very dangerous position to be in,
Mm.
and we know that the FCA are nervous about the number of appointed representatives, and they are actively trying to reduce that number.
Okay, that's fair answer that one. Couple of other ones. Some blocks of flat policies only provide for alternative accommodation for a year or two. Even 3 years may not be enough. What happens if the building takes longer than 3 years to rebuild?
So they shouldn't be ultimately. The sort of insurance policies that you buy, certainly for residential buildings. So let's put residential buildings that have a commercial element to them to one side. They should include an uplift on the policy, which is sufficient to cover the rebuilding of the property, but also the rehoming of the residents for the duration that property is going to take to be rebuilt. That on a good policy, that would be about 35%, a 35% uplift on the declared value.
Mm.
Where you have residential buildings that maybe they've got a Marks and Spencer's on the ground floor, that is where you would get a commercial loss of rent, which is normally offered on either a 12, 24 or 36-month period. So, for example, if the annual rent for that commercial unit is £100,000 and you have a 36-month indemnity period, you'd have effectively £300,000 worth of cover to cover the rent for 3 years. So that's the only time really that you should be having a time limit put on loss of rent or alternative accommodation.
Okay, so it's a policy thing. Now I said what about self-funding claims, and back in my mind was thinking, is that masking, is that being a bit dishonest? And somebody's actually raised that, saying if you do self-fund low-level claims, increase excesses, only masking claims frequency. So would you as a broker seek details on whatever, on those ones? Do they exist and how many are there?
No, I think and I get exactly where they're coming from with the question. I think it's certainly not about being dishonest or masking the frequency. It's more about providing the right outcomes for consumers, which is effectively, if we're putting those low-level claims through as claims, they're going to impact the premium, and the premium is going to increase, and the leaseholders are going to effectively be complaining because the premiums have gone up so much. It is within the leaseholder's power not to make those low-level claims, and we're talking sort of £500, £750. We're not talking thousands here. But it's sort of risk management of the insurance policy almost.
And it's mathematics, isn't it? It is cold hard logic, really. I mean, it sounds an awful thing to say, but you're looking at remediation. Developers, leaseholders, insurers have very different views of what that means. So leaseholders want as much as they can get, obviously. Developers will do, as to my mind, as little as they can to assure life safety. And this is going to sound awful, but the insurers are kind of, well, it's terribly nice that everybody's getting out of the building, but what we're worried about is the building burning down. That's our risk. It's finance,
Yeah.
And so the mathematics are very, very different. So in answer to that question, I guess it's, if you want to keep self-funding the low ones, that's great because I don't have to pay them out. So that's part of my mathematics. Just a dirty great spreadsheet.
And I mean, I think on one of the later slides that we've got, I think personally it demonstrates the problem within the market perfectly when we're looking at sort of the demographic of claims and where claims occur across a very large portfolio.
Yeah.
And the market that we all want is a market that is buoyant, and you've got insurers sort of fighting against themselves to win new business, because that's when the premiums start to reduce. We're not there yet. We're not there yet. In fact, I'd say we're probably quite a long way off that.
Completely off the piece, but you just said about people fighting. We've seen consolidation at the property managers. We're seeing some consolidation at the insurers, and of course the shrinking. What's happening to the broker market? Is it burgeoning? Is it shrinking? Is it consolidating? Staying level? Staying level? What's happening with the brokers?
Well, again, good question. Independent brokers are few and far between nowadays. There have been an awful lot of consolidators coming in and buying up brokers in their droves. There aren't that many independent brokers, and the number will continue to decrease, I would imagine. And that's largely driven by some of the large nationals and internationals wanting to get market share in certain areas. A lot of sort of very niche brokers have sold up. And let's be honest, the multiples that some of these big nationals and internationals have been offering have been too good for independents to refuse.
Oh, flurries of questions coming in. We've got 20 minutes left. One of the things I do want to do, and I'm not disregarding these questions, hopefully we'll be able to whiz back to them, but we did mention the very original question about the TPI has mentioned 92%, etc. I know you've got some feelings about this. We've got some slides which I'd like to come over to, but keep the questions coming. We'll come back to them where we can. So this is the the TPI data, which showed on the whole why is service charges going up, and utilities, well, good old Vladimirovich on that part. Other professional fees, some of that was, well, as I've said, just people are going up, legal fees, etc., etc. But the big one there was buildings insurance at 92%. And that chimes in with, as we saw today on the BBC, that block of flats of 14 in Norwich went up from 4,900 to 29,000 because they got some cladding. Can't be that tall to be 14 units. Nick, John T, can we get on to the next slide? And this was the breakdown of how it changed over time. So you can see that buildings insurance became more and more, the light blue, a proportion of the cost of the service charge. I'm afraid that the three donuts are all the same size. They should actually, ideally, they would have grown proportionally, but that didn't quite work. But you can see again, buildings insurance is becoming more and more part of it. Now, that's the data that the TPI had. It's from certain numbers of their members. It's you and I have talked about this. To my mind, you can't split that out, because if you want to say in 2023, buildings insurance was 16%, you might want to argue, well, that's probably too high, but it's the proportionality you get. We've got another slide, which I think has got your data on it. Do you want to talk us through that a little bit, Rob?
Yeah, it's quite a busy slide now. It's on the screen.
Yep.
I mean, as I'm sure with a lot of people on this call, when I saw the TPI data suggesting a 92% increase, I was quite shocked, and I think, as a sort of an industry leader, quite upset that the industry was letting, or the perception was that the industry was letting the leasehold sector and property managers down to that extent. I mean, as you alluded to, Nigel, the TPI data was taken from a certain set of members. It was based upon around about 108 developments, and a number of our clients provided some of the data that was put into that. And what became quite clear was that certainly the data that our clients had put forward was on their large and complex cases. Now, what we did on the back of that was we did a deep dive on the 8,200 developments that we are responsible for insuring, and it actually showed a very, very different picture. Now, what it does show is that immediately, sort of the 18 months immediately after Grenfell, the high-rise above 18 metres cladded buildings had a huge increase in premiums. And I would probably suggest that
that's what skewed it.
Yeah, this is, early 2019, late 2018, perhaps, is really where the insurers woke up to cladding and what cladding was and what fire safety was in high rise.
And you also overlay to that what blocks are most likely to have managing agents, big complicated ones.
Yeah,
so
exactly.
The managing agent data will be inherently biased towards more difficult blocks.
Yeah, absolutely.
Sorry, I interrupted you, but
no, not at all. It's a good point. And I mean, I think what this shows, there are a number of positives. Obviously, the 2019 sort of blue bar, if you like, is a massive negative. But what it does show is over the preceding years is that there has been a reduction in those significant increases.
Yep.
That was slightly skewed last year because of the obviously the buildings cost index with regards to building materials went through the roof, but that seems to be calming down again. But I think it shows quite clearly that the insurance industry is not necessarily letting all property managers and leaseholders down. It is letting everyone down still on what is perceived to be a high risk building. Those premiums are still too high.
But is that letting down, or is that just, well, as I said, it's usually mathematics. It's that they're realizing that the cost of and the risk, until the remediation pulls through, it's a higher risk. My car is full of petrol. It's a bit more high risk now.
I mean, I think you've heard me referring to this a million times before during with our meetings with DLUC, Nigel. But I am of the view with cladded buildings of any size that actually it's almost what I call the 9/11 effect. In so much as probably the safest day ever to get on a plane was immediately after the 9/11 attack. And I think the same is true with blocks of flats. Everyone knows what we're dealing with. Fire services are aware of the problems with particular blocks. They're aware of where the services are, and they're aware of where the escapes are, the layouts of buildings. We're trying to remediate. Some buildings have waking watch. Some property managers have stopped barbecues on balconies or smoking on balconies. So we're actually in a safer place now than we were pre-Grenfell.
Well, if you look at the fire brigade data, over the last 20 years, fires are still coming down.
Yeah, absolutely. But pre 2017, we didn't know what we were dealing with. Now we do. And I think where I said earlier on about insurers letting us down, that I think insurers have been very slow to want to understand that actually there is more risk mitigation now than there ever has been, especially on blocks that need remediation.
Actually, John, if we can go back to, so there's 38.1, which is the average. Gosh, excuse me. If we go back 2, you'll see how that fits in roughly with everything else, funnily enough, apart from utilities, which are coming down. So Brent was, 79 the other day. Stuff is, it's all starting to normalize again. What I'd like to do is, sorry, John, to muck you around. Can you go forward 2 or 3? So and that one. So this is an interesting one. Do you want us to talk us through this?
So again, this is over our 8,200 developments, and this is basically the makeup of the claims. And I think it's quite clear where the issue lies. The interesting one that I spoke to you about yesterday, Nigel, is that fire doesn't even. I think fire is included within the white line of accidental damage. It is that small. The problem is water. One insurer, I won't mention who, but one insurer published recently a set of their year-end figures and suggested that 88% of all claims that they had received within the preceding year were relating to water. And I heard an interesting fact only last week that last year, £10 million a day was being spent by insurers on water claims.
What's happening? Is it cheapo construction? Is it push fit because we're not using soldered copper pipes anymore? What's running this?
So I think if you go back a few years ago, there was a lot of cheap plastic piping that was sort of knocking around. That seems to have not gone, but it doesn't seem to be as widely used as it is now. One area that we see a lot with plastic piping is basically being incorrectly fitted, where metal sleeves are not put across the joint areas. So the joints, they do degrade over time, and you've got a leak, or where someone has unplugged one of the joints and then plugged it back in. Again, it wears out that seal. The seal is only really good for plugging in once.
Is there any technology that can help? Because I know on mains water you can put in a sensor that goes, whoa, something's going on here. This is really starting to rush, and it's going for 3 minutes. That's not right, and it'll shut off the mains.
It's certainly something that's growing within the sector, and we do have a number of developments that do have surge protection. I mean, on smaller developments, you would tend to have the surge protector on the mains pipe that comes from outside into the development before it sort of splits off. Certainly with larger developments, we're starting to see surge protectors actually on each individual unit inlet, which I think is a better way of doing it, because it means if there's a leak in flat 1, it shuts off their water, but not everyone else's. Another area that we see a lot of claims is, or certainly water claims, is with regards to water ingress, and in particular with regards to flat roofs. And I cannot.
So that's the other half. Actually, it might be interesting if it's possible to split that water into burst pressurized water and roofs.
Yeah, well, in fact, we did, and I chose to put them together. So water ingress is very similar to the accidental damage. So it's around probably about 10% of all of the water claims that come through.
What's subs, by the way? Sorry, I should have asked you before.
Subsidence. Subsidence. That is one that I hate to say I would see growing quite significantly. Insurers are becoming very, very wise to subsidence areas. A lot of sort of inside the M25 is now deemed to be high risk subsidence, unfortunately.
Is that because of our Victorians who happily built on London clay because it was solid, and now we've taken the water table, it's cracking and everything's moving?
Well, yes and no. It's more, and I hate to have to mention it, but it's more to do with environmental impact, the weather. Yeah, we're having sort of, although this year perhaps is an anomaly, but long dry summers followed by sort of fairly wet, mild winters.
Yeah.
And certainly for areas such as London built on clay, that's a recipe for disaster.
Now, something we had which will be dear to, well, dear to building owners is, sorry, company owners is commissions.
Yes.
Now they're changing. So the past was the agent would get, or usually get, a commission, which was part of the broker's commission, etc., etc. And Mr. Gove has clamped down on that and said that people, should be paid appropriately for the work that they do, which is not an unfair thing to ask for, to be quite honest.
No.
How do you do that? What do you do if you are challenged? You've been taken to the FTTP. How do you prove? Are you supposed to keep logs? I mean, what are your thoughts on this as a whole?
The first thing that I would say is I've been a property manager, so I understand fully how important commissions are. And I'm a huge supporter of managing agents earning a commission for the work that they do. And we have told Michael Gove that in no uncertain terms. The key with commissions is transparency. We know that there are managing agents out there that are earning huge commissions and commissions that just simply can't be warranted by the work that is being put in. So it is all about transparency. Most of the people on this call will be aware of the announcement that the FCA made in September last year, and then followed it up on the 31st of December last year, with regards to demonstrating fair value. Now we know that commission levels of around 15% have been tried and tested within the FTT process. And we know on occasions that the FTT have deemed that to represent fair value. And as such, as an industry, we would suggest that with a fair value statement, which is effectively a contract between you and your broker demonstrating what each side does to sort of sing for their supper, if you like, that actually that puts you in a fairly strong position to defend any claims around fair value. I think if you start applying fees and start earning or continue earning over that 15% threshold, you're on very, very difficult ground.
Okay. Now there's a technical question coming from Anonymous. On the subject of commissions, are appointed representatives, DPB exempt agents and fully authorized regulated agents likely to be able to continue earning commissions from brokers, or are they in the same boat as the non-regulated MAs?
I think they'll be in the same boat as everyone else.
Yeah.
I mean, I think the good news is that obviously with the change of government, Michael Gove's going out, he had quite a bullish approach to regulation and reform. I think, the commission subject is something that has maybe put on the back burner to a certain extent. I do think genuinely it will come in and there will be either a capping or a ban of commissions, but it will apply to everyone.
Yeah. And there's very little between the various parties jockeying for position, to be quite honest, apart from Greens and Lib Dems, and those Greens and Lib Dems on the call, sorry, but that's unlikely to materialize. We've got, you might not want to answer this, up to you. Have you, well, it's a fair question, have you as a broker capped your commission earnings and or capped the commissions paid to third parties?
100%. 100%. Absolutely. So for the
well, that's your commission, 100%.
No, I wish. No. So effectively what we did, that question could have come from another broker actually. What we did immediately was we capped our commission. So where we're paying 15% to the property manager that we work with, we will earn no more than 15% ourselves.
Mm.
With a number, in fact, the vast majority of managing agents that don't take any commission will actually drop our commission from the 30% gross that we have agreement from the insurers to receive down to 15 or 20%. For us, and again, I don't mind sharing this, for me as a business owner, to keep the lights on and to keep my staff paid costs my business the equivalent commission of 12.5%. So if I'm writing business at less than 12.5%, keeping 12.5%, we're effectively losing money. And I don't think that any leaseholder, any government or any regulator can say that 2.5% profit margin is too much.
Yeah, and if it's the case I'm thinking about, that 15,000, I think it was Southwark Council, they basically went out to an insurer and said, if we give you a 3-year policy, will you give us 25? And how it turned out was they said, look, the 15% was reasonable for the work that you did. The extra 10 you wouldn't have worked for.
Yeah.
But that was to me, that was misconstrued that 15% is the right figure. What the actual judgment said was you have been able to prove that that figure is. So the judgment was more, whatever the number is, if you can prove it, okay. Not that 15% is the be all and end all.
That's the purpose, or should be the purpose of the fair value statement that managing agents have with their broker.
Yeah.
It is a very simple document, but it shows very clearly to anyone that wants to look at it exactly what a managing agent is doing to justify that 15 or 10% or whatever they're earning.
And what it is. Quick question, but I do want to finish off on, what can the people on this call do when they get back to when they turn off this webinar to help reduce premiums? But quick question which got me. Why are mainstream blocks of flats brokers pushing policies that won't pay out if a single flat is occupied for 30 days or more? It's crazy. Policies that are really unfair and unmanageable occupancy clauses. Have you come across those? I hadn't. That was new to me.
Yeah, I have, and it's. I mean, it's something. Again, I'm going to do a shameless plug. It's not something that we have. So it's basically a part of the policy wording that's often been overlooked. Now, for example, all of the policies that we offer will not deem a block unoccupied until 75% of the units are unoccupied.
Okay.
Which I think is a very reasonable approach.
Yeah.
But yeah, I mean, there are a lot of policies out there that will deem a property unoccupied if one unit's unoccupied for 30, 60 or 90 days.
All right.
And it's something that you need to be aware of. You need to check.
For those of you whose questions we haven't answered, I do apologize, but Rob and I will do a scrub up afterwards, and Fixflow will produce a document and we'll endeavor to answer all of those. We've got 3 minutes. So first of all, Rob, thank you so much. It's been really interesting. And it is really complicated. I think I was kind of tongue in cheek at the beginning when I said the dry world of buildings insurance, but it's a massive thing for property managers. But the takeaways, the property managers in particular on this call, what can they do? And let's just focus on to help their leaseholders at the moment, get the premiums down. You said, clear claims history. What else can they do?
Check that the underwriting details correct. Check that statement of fact. Make sure that it's got everything it needs on there. That's a massive area that we see managing agents falling down on a daily basis. Buildings being rated on an incorrect basis. And really, risk improvements. Really keep on top of risk improvements, especially if they come from an insurer. And the general day-to-day sort of housekeeping, if you like, make sure RCAs are done, and make sure that the valuations are up to date, health and safety is sort of nailed on, and fire risk assessments are up to date.
And what about the tech, like those leak stoppers?
Yeah, I mean, look, I'm all about trying to save leaseholders money wherever we can, and obviously applying things like these surge protectors on developments that don't have water-related issues seems like a little bit of a waste of money to me. Yeah. It's a preventative measure really for those developments that are having inherent water leaks.
Okay.
I mean, of course, if directors want to put surge protectors in, great, it will help. But I mean, it seems, going back years ago, I would have said that having sprinklers in developments would be a massive plus. But we've had one recently where there's been a fire. The fire damage has caused £5,000 worth of damage. The sprinklers have caused £300,000 worth of damage.
Yeah, I'm not going to say who, but a friend of mine owns his own firm, and exactly that happened to him.
Yeah.
Good Lord. Okay. And just last very quick question: 5 years from now, premiums up or down? Which way do you think they're heading?
I think they're continuing to go northwards.
Really?
They need to, because insurers, as you saw from one of those slides with the claims, insurers are losing money in multi-occupancy residential.
Okay. But what we should hopefully see is those horrifying blue columns of 18 meters cladding will start coming down, and it's, as you say, it's the general overall thing.
Yeah. The final thing that I would say before we sort of call off is on the blocks undergoing remediation, where after remediation they're basically getting a B2 rating, a B1 rating. There still seems to be a large amount of nervousness amongst insurers about that B1 rating. Wherever possible with remediation, aim for A2.
Okay. All right, Rob, we've run out of time.
Thank you.
Thank you very, very much indeed for that.
Thanks
for everybody else. See ya.